Australians are obsessed with housing, and the spotlight on housing is shining even brighter than usual alongside a massive boom in prices. Dwelling prices fell following the onset of the coronavirus, but they turned around in the second half of 2020 and they've been picking up steam ever since. The housing pipeline is also growing, building approvals and housing finance are surging. So, what is driving the boom? What are the hotspots in the market? And what do we expect in the coming years? There are both demand and supply factors underpinning the boom. On the demand side, interest rates are very low and are expected to stay low for some time yet. The economic backdrop is improving, and the rollout of vaccines will hopefully put the pandemic behind us. And relatedly, confidence is elevated. Consumer sentiment is at a 10-year high, and this means people are more willing to spend. Government incentives have been playing a part, notably home builder. And on the supply side, the level of housing stock is low, and this is also propelling prices higher. This is all occurring while international borders are closed. Borders reopening and the resumption of immigration will put further upward pressure on prices. So where are the strongest performing pockets? The pandemic has led us to rethink how we work and live. We've all been spending a lot more time at home, and people are looking for more space and placing less importance on proximity to the CBD. This has meant, over the past 12 months, regional areas and detached housing have outperformed, and high-rise units are a clear weak spot. That said, as life starts to return to normal, we are seeing early signs that heat is picking up again in the capital cities. In fact, in March, prices grew faster across the capital cities than in the regional areas for the first time since the onset of the pandemic. The natural next question is, what do we expect going forward? We have a long-held forecast of 10% growth in prices in 2021 and another 10% in 2022. Now, this may look conservative. Dwelling prices posted over 5% growth in the first quarter alone. What is key is how policymakers respond to these developments. They can pull on levers to rein in the market if there are concerns about excessive risk-taking. These levers, called prudential controls, were utilised around 2015 to 2017 to combat risks in the market. We cannot rule out the possibility that regulators will intervene later this year. However, there are spillovers from a housing market upturn which support economic growth. And so policymakers won't want to turn off this tap preemptively, especially as we are still repairing the damage from the pandemic. Regardless, the housing market will be running hot for some time yet.